and we'll deal with that. Okay, so here's how the short trade goes. The short trade, we're going to set it up the exact same way. Michael, you're just going to come into your broker. You're going to fill out the order form. We're going to sell short 100 shares at a market price. Or Roxanne, if you want to do a limit order, you can do a limit order. I don't care. So there's your basic order right there. Now, to set this up with the entry trigger, we're going to click on the button that says trigger. And when we do that, it brings up a different tab. And you notice this is kind of like laid out like folders, different tabs here. Okay, so the trigger says if, and here's your condition, the last price of QQQ is less than, not more than, but less than 61.50, then we're gonna trigger our trade. Here's why you want less than, because we're going bearish here. So we want, on the way up, we want the stock to trade up and be $66 or more. And on the way down, we want it to be $61.50 or less. Does that make sense? So if QQQ is the last price that's less than $61.50, then trigger my order that I just set up to sell 100 QQQ stock at the market price with the duration of the day. And that's going to get filled instantly. And that's how you do the same trade setup for a bearish trade. Okay? Now, let me answer... I want to answer Larry's question about the stop in just a second. Tim has gone off into guitar land with my moderator, Ray. I have no idea what you guys are talking about. Do I have any other questions about triggers and this stuff that I'm talking about here? Okay, let me talk to Larry about the stop, because, Larry, that's my next screen right here. Larry, you can set the stop up the same way. There's a couple ways you can set a stop on a stock order. With the option order, you probably want to set it up as a trigger. That's usually the way that I will set it up. You can actually do it a couple ways, but the trigger is normally what I'll use for an option. With a stock order, you can either use a stop order or you can use the trigger. In truth, a stop order is a trigger. That's what a stop is. And so all a stop order does is it says if you hit this price, then trigger this trade, either a market order or a limit order. And a limit order is called a stop limit. If it's a market order, it's called a stop. If you set the trigger up as a trigger, it does the exact same thing. And so it doesn't matter if you use the stop order or if you use the trigger, but the trigger can be used as the exact order. Watch this. Here's how we would do it. We're going to set up a sell order to sell my 100 shares at a market price. Somehow I got the wrong ticker in there. Forgive me for that. And then when we click on the trigger, it says if the last price is less than 64.50. Okay, forget that symbol. I have no idea how we got the wrong symbol in there, but the numbers are right. 64.50 was our stop. So if QQQ has fallen down to 64.50 and the last price is 64.50 or less, then sell my stock at the market order or the market price. That is a trigger trade that triggers the exact same thing as a stop. Now, if you choose to set it up with a stop order, it's the exact same thing. But as soon as the order is filled, you can turn right around and set that stop, Larry, and you can trigger it exactly the same way. Does that make sense? Did I answer your question? You know, a lot of times these questions, they seem overwhelming until you go to your broker and you go to your virtual trading and you just start doing it. That's usually when the aha moments happen. You just start walking through it. Yeah, Larry, it is a separate order. You don't usually, most brokers don't let you put the whole order in at once. You will typically do the main order, and then you'll come behind it after it gets filled and put your stop order in. Now, in Forex trading, it's different. In Forex trading, I can put the entire trading plan in, but most of your stockbrokers don't let you do that, not based on a trigger. Some of them will, but most of them will not. Okay, let me do some Q&A here. Kevin, that is one way you can handle that. I'm not going to get into that right now, Kevin, because I don't want to get the class off on that tangent, but that is one way you can do that. Okay. All right, let's do some FAQs here. How do you choose a stock? Well, Dinesh, I've already answered this one for you. You choose a stock by just picking one. I truly do not care. We can come over here, and I can come to Trade Navigator, and I can pick any of these stocks, and I can start doing my trade setup. I don't care what it is. I can start doing it. And you say, well, I don't want the top 10. I want more variety. Okay, here's my top 40. All right, there's Best Buy. There's Peabody. There's Chipotle. There's Chevron. I can go through any of these and do the same trade setup. And you say, well, I don't want any of those. I want my own stock that I'm married to. Okay, Dinesh, what stock do you want me to look at tonight? I told you I was going to look at one. Tell me which one it is. Dinesh, he's going to tell me EMC. All right, we're going to look at EMC. And there you see, Dinesh, I don't have any lines drawn on this. And I'm going to just tell you that I don't think I've ever traded this stock. So by the time we're done tonight, I'm going to do a trade setup on it, but I'm going to finish my FAQs first. We'll come back and look at this. How do you choose a stock? I just chose one because Dinesh said, would you look at this? It is that simple. You do not need to go scan. You need to pick a stock and then do the analysis on it, and the analysis will tell you if there is a trade or if there is not a trade. And then what we're going to do is we're going to walk through the 5 steps of trade confirmation. And when we walk through those 5 steps in our analysis process, it's going to tell us if this is a winning trade or if this is a kind of an average dud trade that we don't want to get into. Okay? Next question I've got on here. How long should I hold the trade? Well, Dale, how long do you think you should hold the trade? I'm going to pick on you guys because I think a lot of you ask these questions and you already know the answers, but they're valuable. I think that a lot of questions we ask, if we just think through them, we'll answer them ourselves. So that's why I pose them back to you guys. When do you think we should close the trade? Tim has suggested when we hit the target. Gene said when you hit the target, and Dale said when you hit the target. I think all 3 of those are absolutely perfect answers. You want to sell the trade, hold the trade when you hit the target or when you hit what else? When you hit your stop. Either when you hit your target or when you hit your stop. Otherwise, unless there's some other information that tells you to close the trade, there's no reason to panic. You set your trade up, you did the analysis, you did your trading plan, and unless you've hit your target or you've hit your stop or there's a third piece of information that tells you should close it, you can just hold the trade until. Third pieces of information would be things like, earnings are coming up in 2 days, and I don't want to hold over earnings. That could be a thing. Maybe as you learn about candlesticks, you may find that there's an early reversal signal on a candlestick, and that may tell you I want to close my trade early. It could be, maybe news came out that affected it. It could be, those would probably be your biggest kind of third-party things that would have happened. If you're trading an option, maybe the trade just took longer than you wanted and you're running out of time on the option. That might change the time that you would hold the trade. But generally speaking, you want to hold the trade until you hit your target or you get stopped out. Okay? Next question I got. Should I use margin or not? Was that in this class or was that another class that I had someone asking me if a margin account was good? Was that this class? I can't remember. I teach so many of these things. I don't have a strong opinion on margin. Here's my general feeling on it. I'm okay with margin as long as you don't let yourself get into margin trouble. And what I mean by that is if you get into a trade on margin and it's a 2-year trade, that's probably not a good idea because you're going to be paying maybe upwards of 8% interest on that margin. That's probably not a good idea. So I'm not in favor of margin for that. If you're in a margin trade for a week, I'm okay with that. The interest isn't going to be a problem. But here's where it could be a problem. If you go trade on margin and you don't have your stops in place, that's a really good way to wipe your account out. So, that's what I mean when I say I'm okay with margin as long as you don't do the stuff that will get you in trouble with it. What will get you in trouble is having huge amounts of margin and racking up a large interest bill because you're just holding the trade for a long time. And what happens for a lot of people, they have this really bad habit of not cutting a losing trade. I mean, it's just a pervasive habit. And if I did a survey, many of you would confess that you've done that. And what'll happen is, let's say you go into a trade at $100 and you think it's going to 130, but it goes down to 95, and it just kind of gets stuck there. And you're like, well, I'm not losing that much. I'll hold it for a while. And before you know it, 8 or 10 months have gone by. The stock's gone nowhere, and you're waiting for the trade to turn good because you just don't want to lock in that loss. Well, if you're on margin, you're paying interest that whole frickin' time. That's a problem. That's what I mean by avoid the margin stuff that'll get you into trouble. Now, if you're day trading, I'm more than fine with margin. If you're swing trading, I'm more than fine with margin. Just make sure you use your stop and do good risk-reward management. I'll talk more about risk-reward in level 3, but just make sure you've put boundaries on it so you don't have a runaway trade that's double dipping against you. Because the bad of margin is for every dollar you lose, you're actually losing 2. The good is for every dollar that the trade goes up, you're making 2 for the amount of money you put up because you got the leverage. So, I'm pro leverage in most cases. I just want you to understand the good and the bad of leverage. That's my thoughts on that. If you got any more questions about margin, I'll address them. But those are my thoughts on that. For full disclosure, for the record, I use margin, especially in Forex. I mean, I trade margin. I'll trade 50 to 1 margin in Forex, as much leverage as I can get. So I do use that. Okay. All right. Let's next question here. Should I look at fundamentals, or when should I look at fundamentals? This is. I think I'm going to just be able to be candid and say I think this is a personal opinion. I don't ever look at fundamentals. I just truly don't. I think that fundamentals, for me personally, they're a waste of my time. Now, that's like heresy. I know, I'm speaking heresy. And for me to tell you, don't buy the dip, buy the breakout, for me to tell you don't look at fundamentals, it's like I'm teaching you heresy. And whenever you hear someone tell you something that's opposite of what you've believed your whole life, it's kind of like saying, God's not what you thought he was. I mean, you're dealing with beliefs here. If you feel more comfortable looking at fundamentals, by golly, go look at the fundamentals. I don't think you need them. Part of the Dow theory says that everything that can be known about a stock has already been priced into it. And so I operate from the theory that if there's fundamental information that can be known, it's already been priced in. And the only thing that's left is trading sentiment. And since the only thing that's left is trading sentiment, I don't need to bog myself down with trying to crunch a bunch of fundamental numbers and figure out what the theoretical value of a stock could be. Instead, I need to spend my time looking at the information as it's reflected in the price action of the sentiment and ask myself, what is the sentiment of the traders telling me? That is my opinion. It serves me well. If you do not like that, I'm okay with that. But for me personally, I say, when do I look at fundamentals? I personally never look at fundamentals. And so you can take that information for what it's worth. I'm happy to engage in that conversation on a different level. I've just given you my opinion. And if we need to talk more about it, we can. But I think that I've made my position known. Okay? There we go. That's my commentary on that. Kelvin says economic news too. Well, I keep a bigger pulse, fundamentally speaking, maybe on the general economy. But again, Kevin, that stuff gets priced in so fast. Here's what I'll look at. I'll look at, broadly speaking, I'll say, look at the value of the dollar. The dollar is going up. I'm telling you, gold's going down. I don't have to be a fundamental rocket scientist to figure that one out. The dollar's going up. Fundamentally, gold's going down. If the dollar's going up, oil's going down. Those are the kind of fundamentals that I will look at because it's a natural, direct correlation. I'm not going to sit here and say, well, the Fed is meeting on Wednesday, and I think they're going to say this. And if they say this, then, percentage-wise, this is what impact it should have over here. That's getting into theory, and that's pure speculation. And I'm just not going to play that game. I'm not smart enough to play that game. So I would prefer to focus in on the technical side of it. Okay. All right, ladies and gentlemen, I have given you, I'm going to come back and I'm going to look at EMC for Dinesh, but I've given you this entire lesson tonight. And so let me give you some homework here, and then we're going to go do a trade setup with Dinesh's trade. Here's my homework for you. Work on doing your trade setup. Set up several in your virtual accounts. Those of you who are asking some questions about the order forms, you really need to go put it in your virtual account and see if you've got a question. And if you do, either ask us or call your broker and ask them. That's kind of why you pay them. And so I don't represent any of these brokerages, so it's not always the best use of my time to teach people their platforms, but it is their time, it's their business to do that. So if you got a question about Options Express or Options House, go ahead and call them and say, hey, I'm in my virtual account, this is what I'm trying to do, and they should be able to walk you through that. Set up a logical plan based on our last 6 classes that we've gone through together. We've gone through 5 classes where you learned a lot about analysis, and then in this class we learned about putting together your first trading plan. And then, go onto the website, get in the forums, and talk with the other students about what you've been walking through and what you've been learning. Honestly, at this point, the most valuable thing you can do is start taking an action, whatever that action is. The more action you start to take, the more you're going to learn. And so it's really important that you start putting things into action from here. If you don't do that, then what's going to happen is you're just constantly building information and you get into knowledge overload, but your knowledge overload doesn't turn into skill set. So you need to start taking some action to turn this to turn your knowledge into a skill set. All right. I'll entertain questions. In the meantime, while you think about questions that you want to ask, I'm going to come over here, and Dinesh, I'm going to set EMC up for you. So EMC is the EMC Corporation. And the first thing that we're going to do as we look at this trade, Dinesh, is we're just going to chart it. Since I've not traded this stock, I don't even have the historical data on here, so I got to go grab that. So we're going to download that real fast. As I look at this, my first inclination is, we've got kind of a sideways chunk of data that has been slowly trending higher. But my first thought, Dinesh, I'll tell you, if I'm looking at this, if someone says, hey, would this be a good trade for me? My first thought, Dinesh, is this is not a really great trending stock. That's the first thing I'm going to say. So, if I have to, if I have to do a quick judgment, my first judgment would say this stock in the last couple of years has not trended much. I'm probably not going to spend a lot of time chasing it. I can do the trade setup, but I can tell you that the trade setup is probably not going to be a really great one. Okay, so what I would do when I look at this is I'm going to look back here and say, well, my last big trend went from $8 to about $26. That happened in 2008 to 2011. And moving forward from there, I just went from 28 to 22, back to 28, back down to 23, back to 27, back down to 22. And you're like, this looks like a channel. And yeah, it looks a lot like a channel. And so this is kind of a channeling stock that's not doing a full cycle. Let me show you what I'm talking about here. First thing I'm going to do, I'm going to grab my crosshair tool, and I'm going to snap a line at the top, and I'm going to snap one here at the bottom. So with that information there, we can start to chart this thing. I'll start here at the bottom and work my way up. I'll put a line in there. I'm going to put a line in here. Yes, I do this very quickly, but I've done a few hundred, maybe a few thousand of these. As you get better and better, you'll be able to do this process quicker and quicker as well. So I'm going to go ahead and just snap my lines in here, and they're pretty close, if not exact. And so I'm just scanning left to right. I'm looking left to right at my crosshair tool to see where the majority of the data lines up. And this is a good one for me to highlight for you. So let me show you this. The reason I selected this price point, notice I got 1, 2, 3, 4, 5, 6 data points there, 7. And then I've got a couple where we're a little bit extended beyond that. So that's how I selected that particular price point, because the majority, even though there's a lot of congestion in there, the majority lines up right there at about whatever that price is, $17.40 or so. That's how I selected that. All right, let's continue coming up a little bit higher here. I'm going to snap a line right in through here, and I'm going to snap one right there, grab that support that I see from 2011. I'm going to snap one right here. That's obviously got some support there. And I'm going to grab one right here. Now, Dinesh, this is really important because I've got a whole chunk of data here where I've got a lot of zigging and zagging, but it's not a clean channel. A clean channel is easier to trade. This is not, because you don't necessarily know which phase or where you're going to be in here. Look at what's going on here. From a pattern standpoint, we do have higher highs and higher lows, but we've kind of got a large triangle. And this triangle has been taking place for 3 years. This is a pain in the butt to trade. At this point, Dinesh, if someone's saying, do you want to do a trade setup? If I had not already said it because I didn't see big trends, at this point I'm going to say, I'm not going to waste my time on it. It's a $28 stock. This is not going to give me the kind of opportunity that I'm looking for. But I'm going to finish this because I think it's valuable for everybody to walk through this. So I'm going to finish this sucker. So having done that, as I sit back and look, I notice there's another resistance pivot area in here that I didn't draw. And there it is. Okay, so I'm going to snap that one in there. And now I'm going to flip over and I'm going to look at my candles to see if there's any information that I can garner from this. A quick gander looking through here, I see there's a few areas like right in here that I get some additional confirmation. Right here I dropped a little lower. Got some great confirmations in there. I think all things considered, this is a pretty good charting. We want to ask ourselves, is this thing going to work well moving forward? And to test that, we look at the history. Did it work well historically? And if I come back to the history, I say, wow, that's pretty interesting, because when I come way, way back here, I see that EMC back in the year 2000 was trading at $100 a share. That's interesting to me. It doesn't tell me anything yay or nay about trading it, but it's interesting. If I flip over to my line chart, I probably would be interested in maybe slapping a couple of additional lines on there just to give me some targets moving forward. So I know that, $37 and so that's logical. I'm not trading all-time territory. I'm going to zoom in a little bit to see how well in these other years this grid worked. And as I flip over here to my candles, I notice that I do have a lower low, even at $4. So I'm going to chart that in there just to have it. All things considered, these support lines worked quite well. I think back to the year 2000 or so, we were in good shape. Moving forward, we already charted this. So, yeah, I think this is a fairly disciplined stock. And the lines that we've got should work. Now, the question that you've got to ask yourself is, how do I do the trade setup? So, Dinesh, I'm just going to walk through the analysis from here. All I've done right here is I've charted it. Now we've got to interpret that data. If I ask you, ladies and gentlemen, how do you interpret this data, what do you tell me? This is your opportunity to put your skills to work. Bullish, bearish, sideways, what do you guys see as we look at this information? You can start typing some of your information, your comments in there. As I look a little closer, I see some shorter term support here. I want to mark around $23, Dinesh, so we've got that there. And I'm going to start analyzing. I'm going to start giving you some feedback. So first thing I'm going to notice is on a grand scale, it's somewhat sideways. It's not a huge trending stock, but on a shorter term view, as I just look at this year of EMC, it's not maybe as bad. We do have a sequence of higher highs and higher lows, and we could mark an ascending channel on there that does have some, some pattern to it that would be worth paying attention to. As I look a little bit closer here, we've obviously recently rallied up into a resistance area just under $30, and we've done that 3 times. What do you guys think? If we rally into a resistance 3 times in about a couple of months, do you think that's a good signal for resistance, or do you think that's kind of putting a wall up there? That's a lot of a resistance wall. That's right. In fact, we have a name for that. We call that a triple top. When we get into level 2, you're going to learn about triple tops, and I'll teach you how to trade them. This triple top played out the way that a triple top typically plays out. Triple tops are bearish terminal pattern. They terminate a trend. We see that happening here. This is what we call the neckline, this line that I just drew here. And most often, I should say more often than not, whenever a neckline gets broken, we sell off to a pivot area. It doesn't matter which one it is. We sell off to a pivot area and we rally. And normally we rally up into the general area of the neckline. Well, we've seen that happen here on EMC. So, Dinesh, even though at first glance I was not that optimistic about this trade, I'm starting to warm up to it a little bit because I see that maybe this has reached a peak and it's going to head back down to some of these, lower lows that we had here. So, as I look at this trade and I say, well, I've got a triple top. I've broken my neckline. Boom, boom, boom. Broke the neckline. I've rallied back up into my resistance area. The next thing that my eyes immediately tell me is my candlestick patterns. Now, this is my own training and my own skills. When you get through level 2, you're going to start to see these things as well. But here's what you're going to be seeing. You're going to see, okay, I traded to resistance, and I got a shooting star candle, and that is a bearish harami. Boom, boom, boom. Those are all bearish signals. Okay, I hit resistance, shooting star at resistance. It's a bearish harami. That's not good. I look at my volume and I say, well, my volume has been contracting during this entire bullish move. That is exactly what I would expect for a counter rally after a triple top breaks and I rally up into my neckline. If I just stopping right there, what are you guys thinking? More bullish or more bearish? Stopping right there. Suddenly this picture that I had started drawing when I looked back here and I said higher highs, higher lows, that picture, a lot of you started writing in bullish, and as I start to talk through the pattern and I start to talk through the behavior, immediately all of you have started writing in, that's got a lot of bearishness to it. And you're totally correct. Do you see how the analysis process, when done right, will unveil the various sentiments? Do you see what we're doing? We're trying to uncover the sentiment of the traders. If you learn to interpret this data, the traders are talking to you. They're telling you what they're thinking. We just got to learn how to read it. So on EMC, we've run into resistance. We've got our triple top. We broke our neckline. We've rallied back into the triple top. Now we hit resistance with a shooting star and a bearish harami. That ain't good. We got a declining volume. Let's take a look over here at our moving averages. What do you think the averages are telling us? You guys tell me. What are the averages telling us? My amnesia has kicked in again. I can't remember how to use them. Christy says yes. The averages are telling us yes. Yeah, the averages are giving us a bifurcated signal, aren't they? They're telling us that we're moving bullish. Now, do you think it's interesting that this moving average cross is in the same vicinity as this one? Do you think that's interesting, besides the fact that it looks like a cartoon character now? I mean, that's kind of funny. That kind of looks like Angry Birds, doesn't it? I could not have gone out and tried to find a trade that would look like this, but now we got Angry Birds. All right, so the answer is it's very interesting that we got moving average crosses in the same price range. If you have moving average crosses in the same price range, what do you think that tells us? Gary is totally correct in his interpretation. Gary said it tells us a sideways move. Gary's totally right. This is most likely a consolidation pattern. Either we are getting into a sideways channel up in this range, or this is part of the bearish reversal. It happened to retrace all the way up here, and we're setting up for a really great bearish trade. Those are the two most likely probabilities. Okay, I'm not saying it can't be bullish, but those are the two most likely probabilities. All right, if you're in a sideways move, if you've got moving average crosses happening in the same vicinity, can you rely on them, yes or no? No, you got to start dismissing them. So we're going to start to shift this part of the analysis out and say, well, it's not as reliable. I got to look at other tools that I've got. Long-term moving averages, we're a little bit bullish there. We're above both of the 100 and the 200, and we got an okay angle. It's not great, but it's okay. I'm going to flip over and look at my oscillators. Those of you who've been through level 2 and you know this picture, what are my oscillators telling me? Yay or nay? We're a little bit overbought. RSI's already turned down. The stochastics is, looks like it's ready to start turning down. This is setting up for a really nice little bearish swing. Okay. There's something else that happened back here. We had a really strong bearish divergence that occurred on the MACD. That's never a positive signal. Very often, that is the termination of a trend. So I'll highlight that. It happened across all three of them. It was really pronounced here on the MACD, and it continued throughout on the MACD, throughout the triple top. So that's pretty interesting, and it's worth noting. As we look over here at our Bollinger Bands, we've traded back to the upper band. We got some band expansion here. I don't think we're getting a solid signal that we need to specifically address here. So I'm going to slide on through this indicator. And then finally, take a look at the ADX here. ADX is turned up, but it's also kind of a bit of a flat angle. What that tells us is it tells us that if we kept going higher, the ADX would get behind it and support it, but this move, this entire bullish move, did not have the support of ADX. You see how ADX was heading down? ADX was very much behind the bearish move, but it's not gotten back behind the bullish move. It's trying to. It just wasn't quite there yet, and it couldn't do it. So we do not have a confirmation either way from the ADX. Now, what do I do with all that information? I can turn that information into a very simple trade setup. At this point, it's easy. I know exactly what's happening. I've looked at it. I've got a very neutral trade. Either this trade reverses and it drops down below about 28.60, and I picked that price by coming over here. I didn't want to go exactly below yesterday's low, so I went 2 days ago, 28.60. That's going to be my bearish entry. And if I move below bearish entry of 28.60, my first target's going to be about $28. So I got 60 cents to work on for that. Okay, not a huge profit, but, if that's a trade that you want to go after, you can do that. Come on, duplicate. My next target would be down here at 26.50. That's a pretty easy target, I would like to think. I would be surprised if we traded to $28 and got stuck, to be honest. We might do it, but more likely this trade would probably get the momentum going down. And here's why. Let me show you why. The reason I'm thinking this trade would probably get the momentum going down to 26.50 is because of the triple top, the break of the neckline, coming back and testing it. When this thing breaks bearish again, most of the time it's a new trend, and we're probably heading to 25 or 23, to be completely honest. We need to be aware that 28 could be a stopping point, but 26.50 should be fairly easy. 25 and 23 become my next targets. So I'll go ahead and put those in here as well. And the truth is, looking at the history of EMC, my hunch would say that that's probably the higher probability of the trade right there, that it's going to trade bearish moving forward. You guys can come back and track this and watch it, and you can decide. Now, what happens if it breaks out above resistance here? If it breaks out above resistance, we could go bullish at 29.35, and, well, we got 50 cents until we're at the all-time high. I'm not going to try to trade that. That's not a trade I'm going to chase. You're welcome to, but I'm not going to do it. So what I would do is I would pull my bullish trigger all the way to the top. And I would say, if I break out above about $30 and probably a little more than that, maybe at 30.21, if I can break out above that, then, well, we'll start talking about some new trades, and maybe $32 is a new target, maybe 36. But Dinesh, I'm going to tell you the trade setup right here. Either we turn bearish at 28.60, we trade through the grid, or we wait until we're above 30.21, and when we're above 30.21, we reanalyze this, and we start considering some bullish trades. Looking at the historical data of EMC, that is most likely what's going to happen, is probably that little bearish correction. Any questions? What I just did with you guys is a complete workup from a technical standpoint of a stock from scratch. And Dinesh, I didn't have to go scanning for this. Even though it's not the trade that I would love, I can still do a trade setup on it, and it's a good trade setup. That is an accurate trade setup. It's not a super profitable trade, but that is an accurate trade setup. You guys see that? Okay, do I have any questions that I can answer about any of this? Ivan says, so you do not want to wait for the next day confirmation sell bar to place this trade. Ivan, I haven't placed the trade. All I've done is the trade setup. Now what we could do, Ivan, is we could go into your broker and we could set the trade up. And we could say if EMC trades at or below 28.60, then short EMC. And where would your stop be? Well, we want our stop to be above resistance. It probably needs to be right up in here. Probably about 29.50. How'd I pick that number? Did I do that because it was 90 cents above the entry? No, I did that because it was just above resistance. Visually speaking, I found that price, and then I said that's the number that showed up. Ivan, did I answer your question? Okay. I didn't answer Ivan's question. Ivan says, but then why do all the analysis if you always set sell or buy? I don't understand your question, Ivan. I want to give you a really valuable answer. I'm just not quite sure where you're coming from here. Can you try that again? I don't understand what your question is, bud. Why would I do the analysis? I did the analysis so I can determine what's happening with this stock. This is a stock I've never traded. I don't have a lot of experience with it. If this was a stock that was in our top 10 that I trade a lot, I probably wouldn't have spent as much time doing the analysis, but I wanted to walk through a whole process and show you guys how you can take a stock you've never traded and do the complete analysis process on it. Once we've got the grid, I mean, if this was a power trader, we wouldn't have done all of that. If it was power trader, I would have jumped right in here. I would have said, well, there's our pattern, there's our break, there's a retracement. This is probably the next thing that's going to be happening. If we break above 30.21, we'll re-question it. If I filled out a journal on this, let me see if I can get a journal up. Hold on a second. I think I can. Hold on. 1 second here. Just sing Jeopardy music to yourself or something. There we go. Okay. So, who am I talking to? Ivan. I'm about to start talking to Dinesh again. Ivan, here's the way this trade would be set up. So today is what day? Today was the 4th. So this is for the 5th of November. Let's get it back up here in front of us. Where'd you go? There you go. So for 11.5, the current price is $28.91. $28.91. Do I have a bullish trade? I have no bullish trade. Okay. Do I have a bearish trade? I do. Where is it? 28.60. With a target of, I could put $28 in here because that's my first target. I could also go ahead and write in here, second target if I want to, which is about 26. What is that? 26.50. So 26.50, I could go ahead and write that in here. 26.50. Did I really do that? Let me get back over here and come back. There we go. Sorry about that, guys. All right, so and then my stop is at 29.50. Okay, now that's the trade setup. That's what the chart dictates. I'm not saying you need to go do that trade. I'm just saying that's what the chart dictates. That is the trade setup that exists on this stock. If I had to trade EMC, that is the trade setup. I don't like the risk reward on it. I don't like the price. I don't like the momentum of it. There's a lot of things I do not like about this trade, but if I had to trade it, that's my trade setup. Okay. Ivan has clarified. He said, so you do your analysis to get a bias, but then we place both the buy and sell. If we think it's going south, then why not place only the sell order? Ivan, do you understand this now? My bullish trigger was a note. This is like, I could put down here in my notes, if above 30.21, consider bullish trade. See, that's more of a analysis note, Ivan. I wouldn't do this. I would not go right now and set a bullish trade up. I've got to get through 2 resistance levels before I could even consider that bullish trade, Ivan. And so I think the confusion is you thought that we were doing both. But what I did the analysis for was to determine what the stock is telling me. The stock is telling me that I'm at a recent high. I've pounded into that resistance. I got a lot of selling pressure there. This is probably a bearish trade. I'm not even going to consider a bullish trade until we're at least at 30.21, and then maybe we can consider it. Did that help you out? I want to make sure I got Ivan clear here. All right, guys, let's call it a night. I think we had a great class. If you got any final questions, you can fire it in there. Otherwise, I'm going to call it an evening. You guys have been fantastic. I wish you all a wonderful Wednesday. And Thursday night, we're going to start talking about options. So you're going to really learn a lot of great stuff Thursday night. You're going to really enjoy that class. Until then, I hope you guys have a great Wednesday, a great rest of the night tonight, and happy trading to all of you. Good night.